Welcome back to the Deep Dive. Thanks for joining us again. Our mission today, well, it's to give you a real shortcut. We want to help you understand this pretty rare thing in the markets, the mega winner.
Yeah, these aren't your slow burn compounders. We're talking about stocks that deliver just, well, enormous gains, multi-baggers, and fast.
Really fast. So today, we're dissecting the mechanics, behind the market's biggest fire starters from this year, 2025.
Right, but look, it's crucial we ground this right away. Building real, lasting wealth in the market, that's usually a marathon. It takes patience, consistency, often years, maybe decades. We always say that.
Absolutely. Stick to the plan.
But when you see a few stocks quadruple or quintuple or even more in just months, well, that's worth studying. It's not about chasing lottery tickets, right? It's about understanding the big forces igniting these companies, what causes these rapid shifts and how the market sees them.
And the result of this phenomenon, it's genuinely staggering. That's why we have to look at it. We looked at 5 specific stocks, 5 that hit this massive gain level just this year, 2025. And when you run the numbers, honestly, the math is almost hard to believe. Imagine this. Start of the year, you put just $5,000 into each of these 5 names. So $25,000 total investment today. You'd be looking at a portfolio worth over $136,000.
Wow.
That kind of appreciation, it just demands we figure out what's really going on underneath.
Yeah.
What are the catalysts?
And looking across these 5 big winners, a few powerful themes, they really jump out, overlapping themes too.
Right.
We're going to see 2 massive industry revivals, absolutely necessary ones. One tied to energy, the global need right now, the other to critical materials,
Sure.
strategic stuff.
Okay.
Then there's this surprising story in real estate speculation, almost entirely driven by market
Yeah.
feeling, sentiment.
Comparisons.
Right, that psychological angle. Exactly. And finally, we'll dig into the importance, often overlooked, of infrastructure companies. The ones providing the essential kind of behind-the-scenes building blocks for new tech. It's a whole spectrum, really. From hard assets and national security needs all the way to just pure market buzz and narrative.
Okay, let's dive in then. We're going to start with maybe the most explosive trend, and certainly the most, necessary one, powering gains in 2025, the nuclear power renaissance. Yeah, our sources are suggesting that 2025, if it's remembered for anything beyond, the crazy speed of AI development, it might just be the year nuclear power became, marketable again, indispensable even.
It felt like a switch flip, didn't it?
It really did, because we've hit this wall, an immediate global wall. The need for reliable, huge-scale baseload electricity is just overwhelming current capacity, and we absolutely cannot wait decades for, the full build-out of global alternative energy grids. It needs to happen faster.
That's the pressure point.
It's exactly. And nuclear. It's proven, it's dependable, and suddenly it feels like it's ready for, mass implementation again.
That urgency you mentioned, that's the real driver here. And within that urgency, probably the most compelling tech story belongs to the innovator, Oklo. Ticker OKLO.
Oklo, okay.
This stock is up an incredible 631% this year. That makes it one of the absolute market leaders, even when you factor in the recent volatility, which has been pretty intense.
Yeah, we'll get to that volatility. But the key twist with Oklo, what they bring to the table, is their focus on small modular reactors, right? SMRs.
SMRs. Now, SMRs, I feel like we've heard about them for years. Lots of theoretical papers, pilot programs. What makes them suddenly so key right now? And how are they really different from those giant sprawling plants we think of from the past?
Yeah, good question. The main difference, it's footprint and utility. SMRs, you see similar concepts from competitors like NuScale Power or Kairos Power. They're designed to be built in smaller, standardized pieces. Theoretically, that should lower construction costs, speed things up. Makes sense.
And they're also designed to operate much closer to where the power is actually needed. Think industrial parks, maybe small towns. You're basically localizing the grid, cutting down on transmission losses, boosting efficiency.
Okay, localized power.
But Oklo, they found a way to stand out even within this growing SMR field. It's their specific technology. They use a fast-neutron reactor design.
Okay, fast-neutron. Walk us through that. What does that mean for you, the listener? What does this type of reactor do that the traditional huge water-cooled plants just can't? And I guess, how does that translate into a 631% gain?
Right. Well, it boils down to efficiency, safety, and circularity. Traditional reactors, the light water ones, they use something called a moderator to slow down the neutrons. That keeps the chain reaction going.
Okay.
Oklo's fast neutron design, like the name suggests, it operates with fast neutrons. This makes them way more efficient at burning the fuel. But here's the really critical part. the market-moving benefit. It tackles the single biggest historical headache of nuclear power: waste.
Ah, the waste problem.
Yeah.
Always the sticking point.
Exactly. But the source material points out that Oklo's specific reactor model, it can actually be powered by used nuclear fuel, including its own spent fuel.
Wait, really? It recycled its own waste?
Pretty much. It completely flips the script, economically and environmentally. You turn this massive liability radioactive waste needing decades of storage into a reusable resource. That kind of recycling capability, that's a huge selling point when you're trying to lock in long-term contracts.
Okay, that is genuinely different. What about safety, though? That's the other big historical hurdle, right, for public acceptance?
Absolutely. And on the safety front, the research confirms Oklo's design has these built-in passive safety features. Because of the physics involved, if the temperature starts to get too high, the reaction naturally just slows down.
Automatically, without complex systems.
Yes. It doesn't need complex external systems or, crucially, human intervention to hit the brakes. And this feature also means they can operate at ambient pressure, which gets rid of the risks linked to, high-pressure steam explosions that were a concern with older designs. So you get this dual benefit: sustainability through recycling waste and inherently better safety. That creates this incredibly powerful narrative for investors, doesn't it? Clean, reliable, modern energy.
Yeah, it definitely does. But looking at the data you mentioned, that volatility, I mean, the ride has been, frankly, terrifyingly intense. Even for a market leader. Oklo's market cap is around $20 billion now, but it's 52-week range. It goes from just $9.01 all the way up to $161.29.
Yeah.
That kind of swing isn't just growth, is it? It feels like a massive disconnect between maybe the initial value and just pure market frenzy.
That volatility, it's often a hallmark, maybe even a necessary ingredient for these true mega winners. Often, these companies combine a relatively small number of shares available to trade the float with a story that feels absolutely revolutionary.
Yeah.
And when that story catches fire, the mechanism often involves massive FOMO, fear of missing out from institutions, from retail investors.
Right.
And that gets compounded by short covering. People betting against the stock being forced to buy back in. When you see a stock go from $9 to over $160 in a year, you're seeing the result of this urgent, sudden realization: wow, this tech isn't theoretical anymore, it's essential.
Yeah.
Investors are just scrambling, fighting to get a position, and basically throwing old valuation models out the window.
Okay, so urgency drives it. But that urgency, it's not just about the engineers building the reactors, is it? If this SMR revolution is the new engine for the grid, well, that engine needs fuel, premium fuel.
Exactly.
And that brings us neatly to Centrus Energy, ticker LEU.
Mm-hmm.
This company is up a spectacular 517%, driven by the exact same industry revival.
Yep.
But hitting a completely different and absolutely critical part of the supply chain.
Yeah, and this is such a crucial lesson in how these mega winners often emerge. Think of it like this. Oklo designs the high-tech reactor, the engine itself. Centrus, they supply the essential specialized fuel. They're the resource provider.
The fuel source.
This kind of symbiotic relationship shows that explosive growth. It rarely happens only to the headline tech company. It almost always cascades backward to the suppliers who control the scarce necessary inputs.
So what's the critical resource Centrus controls? And what's the sort of geopolitical angle that makes their role suddenly so valuable?
Centrus mainly deals in uranium, specifically the enrichment services needed for nuclear fuel. Now, Oklo's tech might eventually use spent fuel, like we said, but new reactors. They need a reliable and rich source to get started.
Okay.
And for years, the U.S., and much of the West, really, we've relied heavily on foreign sources for this fuel, especially Russia and Kazakhstan.
Right, I remember hearing about that dependency.
Yeah. So as geopolitical tensions have, ramped up the need to secure a reliable, domestic, Western-aligned source of enriched uranium, it's become a matter of national security, not just economics anymore.
Yeah.
And Centrus, they step right into that massive strategic gap.
So their domestic position, being U.S.-based, it's being priced at a huge premium because of scarcity and reliability concerns.
Sure. Precisely. And their recent performance really underlines this strategic shift. Last year, Centrus sold $442 million worth of uranium. That's a solid 38% year-over-year jump.
Pretty strong growth.
And get this, They achieved that growth even though raw uranium prices actually pulled back quite a bit in 2024. There was a setback in the commodity price.
Interesting.
So the demand for the refined, secure, domestically sourced product was so strong, it basically insubstituted them from the ups and downs of the raw material price.
And the market story, the narrative, suggests this is just the beginning for them, right?
The analysts seem to agree. The sources we looked at show pretty clear sailing ahead. Projections anticipate revenue keeps growing, hitting $462 million this year, then maybe $506 million in 2026.
Wow.
And this isn't just about selling more raw stuff, it's about locking in long-term, high-margin contracts. Contracts driven by government policy, by guaranteed demand from utilities.
Right. Reliability is key for utilities.
Exactly. This sustained growth path. It's direct proof that the renewed nuclear power industry, fueled by the SMR revolution from companies like Oklo, that growth is flowing directly to the essential resource providers like Centrus.
Okay, so we've just talked about companies built on, hard engineering, strategic national importance, immediate global need, heavy stuff. Now we're making a pretty sharp turn, a dramatic pivot, really. Here's where it gets really interesting, I think. We're moving away from physical assets and engineering breakthroughs to a very different kind of market driver, the psychological need for hope, and how that hope fueled a 380% gain, almost separate from fundamentals.
Yeah, this is a different beast entirely.
Let's talk speculation, specifically in the real estate sector.
Yeah, saying the real estate market has been a challenge this year is probably an understatement. The source material calls the sector a raucous roller coaster ride. Extreme volatility.
That description feels pretty accurate. Ups and downs, very sharp ones. Definitely. And Opendoor Technologies, ticker Open, they're the online real estate listing and iBuying platform. They've capitalized on this psychological swing massively.
Opendoor's up 380% year to date. But the really crucial part is when that gain happened. This wasn't some steady climb month after month.
Oh.
No. Pretty much all of that momentum, the vast majority, it materialized just since June.
This is June. Wow, that's fast.
It's a classic case of rapid acceleration. Triggered by a sudden, intense shift in the narrative, the story changed. The big question then is why? What flipped the switch in June, July?
Okay, so if it wasn't gradual, was there some huge internal change, a restructuring, a breakthrough tech they launched, a fundamental shift in their ability to make serious profit?
Well, counterintuitively, the sources suggest, no, not really. The bulk of that huge move wasn't primarily tied to some massive fundamental shift in their operation.
Really? So what was it?
The trigger was reported as simply an unexpected recovery of real estate purchases in July.
An unexpected recovery.
And here's the key detail, the nuance. Home sales weren't even, spectacularly amazing that month. They just needed to be good enough.
Good enough.
Good enough to stir up bullish speculation. Enough to make people think, okay, maybe the long-awaited real estate recovery is finally here. For real this time.
Right.
The market reacted way more strongly to the sentiment of a recovery than to the actual hard data. It jumped ahead of the facts.
That gap between possibility and reality, that's powerful in markets, isn't it?
Hugely powerful. And once that speculative fuel hit the market, the buzz just took on a life of its own.
Yeah.
It transformed the stock into something much more volatile. It became, well, a full-blown meme stock.
A meme stock, like GameStop or AMC back in the day?
Similar dynamics, yeah. That's the critical thing for you, the listener, to grasp here. The market, both institutional and retail traders, they needed a comparison point, a story for a rapid, volatile recovery in a sector that had been beaten down badly.
Okay, so they needed a parallel narrative.
Exactly. And the buzz immediately latched on to comparing Opendoor to Carvana, the used car platform.
Ah, Carvana. Right, that had its own wild ride.
Totally. Carvana had that dramatic multi-bagger recovery, fueled almost entirely by social media hype and a massive short squeeze. So by drawing that parallel, Opendoor is the Carvana of real estate. The stock suddenly started trading based on that narrative association, almost entirely separate from Opendoor's actual quarter-to-quarter performance, how many houses they were flipping, their margins.
Hold on, let's push back on that a bit. The sources give Opendoor a market cap of $6 billion, right?
Around there, yeah.
But their gross margin's listed as 8.05%. Pretty slim.
Very slim for that valuation, yes.
So a company with single-digit margins is trading in a $6 billion valuation.
Yeah.
Just because of speculation and being compared to a used car company. Doesn't the source material basically scream that this is fundamentally unstable, highly risky, prone to a sharp correction?
It absolutely does imply that risk, and that's the paradox, isn't it? The paradox of the mega winner driven purely by narrative. The market in these moments isn't prioritizing stability, it's prioritizing momentum. And the idea of leverage,
Leverage, how so?
that 8.05% margin, that's just the reality of their business model. iBuying is low margin, high volume, where it's supposed to be. But the intense speculation means the market is pricing in like perfect execution and massive volume growth 3, 4, 5 years from now, but pricing it in today.
So it's pulling future hope into the present value.
Exactly. It's a huge bet on the future, but one driven by this sense of urgency, this association, rather than, deep financial analysis of current operations.
And the trading data, that seemed to back up the urgency idea. The average daily volume, 347 million shares changing hands. That volume is just astronomical. It's like a flashing neon sign, isn't it?
Absolutely. When the trading volume completely dwarfs the company's available shares, the float, and definitely dwarfs the underlying fundamentals, it tells you loud and clear. High trading velocity, short-term traders rotating in and out, intense speculative bets. That's what's fueling the spike. Much more than long-term investors carefully analyzing those 8% margins. The Carvana comparison, it wasn't just a funny anecdote. It was basically the blueprint for how the stock moved. It suggests a wave of traders were just cycling capital, moving from one perceived turnaround story Carvana to the next Opendoor. They saw Opendoor's chart pattern and thought, hey, this looks like Carvana did before it popped, regardless of whether the housing market recovery was real or sustainable.
Okay, so this really highlights that important distinction we talked about earlier. For you, the listener, how much of a stock's sudden crazy flight is based on something real, measurable, innovative product design like those Oklo reactors we discussed, and how much is purely market narrative, emotional momentum, simple association.
Yeah.
The Opendoor story really forces you to think critically, to try and tell the difference between a genuine business turning point and just a really powerful, contagious story.
It's a crucial skill.
Definitely. Okay, let's shift gears again. Let's move to our third and final category of mega winners for today. These are the crucial infrastructure plays. Often, they're the least familiar names on the list. They provide essential kind of behind-the-scenes components that most investors don't really focus on.
Right, the nuts and bolts.
But they are absolutely essential for the next generation technology to actually work at scale. And we kick this section off with a name that is, I'd wager, completely unfamiliar to most people listening. Forward Industries. Ticker 4ORD.
Yeah, probably not one that jumps off the page for most investors.
Right. It's the least familiar name of the 5 we're looking at, which makes its incredible 334% rally this year even more impressive, I think.
Yeah.
And if you just read their own company description, it sounds incredibly vague. A seamlessly integrated worldwide design and manufacturing sourcing group.
Chuckles. Yeah, not exactly crystal clear, is it?
Not really.
If we translate that corporate speak. Basically, Forward Industries acts like a sophisticated design consultant and a logistics expert. They help other companies design new products, then figure out the smartest, most efficient ways to manufacture them around the world.
Okay.
And then they help optimize the global supply chain and delivery. They're kind of a utility player. They work across different sectors, retail, tech, medicine.
So, B2B services company, essentially.
Pretty much. Last year, they did about $32 million in business, which is, small, solid, but completely unspectacular. Not the kind of base you'd expect for a 334% stock run.
Definitely not. So what on earth was the catalyst? What caused a company focused on, manufacturing optimization to suddenly jump 3.5 times in value?
All right, this is where we see the power of making a strategic shift. Getting aligned with the next big thing. The huge gain was driven by an aggressive and apparently very successful pivot into the blockchain business.
Blockchain. From manufacturing optimization.
Yeah. Specifically, the source material notes they position themselves as a leading treasury of the Solana blockchain revolution. This shows perfectly, I think, how even established, maybe seemingly traditional businesses can generate massive market excitement by strategically becoming an essential piece of some next-gen technology puzzle.
Okay, that phrase, leading treasury of the Solana blockchain revolution, that still sounds pretty vague, even for people who follow this stuff. What does a design and manufacturing firm actually do as a treasury for a decentralized platform like Solana? That connection feels like it needs bridging.
Yeah, good point. That's the deeper analysis we need to do here. A treasury in this context, it likely means more than just holding digital assets, right? It implies they're providing some kind of critical infrastructure or maybe capital flow services for the Solana ecosystem. So for a manufacturing-focused company like Forward Industries, the most logical interpretation of this pivot is probably twofold. First, they're likely using the Solana blockchain, which the sources highlight as being super fast and scalable to offer maybe tokenized supply chain tracking or optimization services for their global clients.
Using blockchain for supply chain, that makes sense.
Right. It would validate Solana's potential for enterprise use cases. And second, as a leading treasury, maybe they're involved in custody or validation or staking services for Solana's own currency, SOL, positioning themselves as this crucial, trusted bridge, both financial and physical infrastructure, between the huge world of traditional manufacturing and this new decentralized digital economy.
Okay, so the market isn't just buzzing about a potential application. It's pricing in the idea that Forward Industries is using its existing physical supply chain know-how to become a vital, trusted player, a validator, and adoption agent for one of the top blockchain platforms out there.
Exactly. They successfully managed to change the market's entire perception of who they are and what they do. They're not seen anymore as just this, slow-moving design and sourcing company. They're suddenly viewed as a critical piece of physical infrastructure that's helping this revolutionary digital tech expand.
Right.
And that immediate belief in their future position, that's what created the massive rally. It completely outstripped their current $32 million revenue base.
It's a powerful lesson, isn't it?
Yeah.
How an effective pivot, or even just the perception of an effective pivot, can capture the market's imagination.
Absolutely. Narrative driving value again.
Okay. Now, shifting from digital infrastructure, let's talk about physical, absolutely crucial assets. Let's turn to the national security play here, MP Materials.
Right. MP Materials, ticker MP, up a huge 414% in 2025. This company is a rare earth miner and refiner, and its strategic importance, particularly to the United States, well, it really can't be overstated.
Rare earths.
Yeah.
These are the elements essential for modern tech, right?
Exactly. We're talking about materials that are fundamental to the modern economy. MP Materials is the nation's biggest and currently its only integrated producer of the highly magnetic materials needed for EVs, electric vehicles,
Okay.
but also advanced defense systems, high-tech electronics, wind turbines. The list goes on.
So this puts us squarely in the realm of, strategic resources, scarcity, geopolitical leverage.
Absolutely. And the core asset they possess is just staggering. MP Materials sits on this truly massive deposit of crucial rare earth metals at its Mountain Pass facility out in California. It accounts for roughly 1/10 of the entire world's known supply of rare earths.
1/10 of the world's supply.
In California.
Yeah. But look, just controlling a huge pile of raw material, that alone probably wouldn't trigger a 414% gain. Mining operations, they're often very capital intensive, slow to ramp up.
Right.
The real market move was driven by strategic deal flow, deals that cemented their future financial importance and their geopolitical importance too. Okay, so what were the specific deals? The ones that really moved the needle and made the market reevaluate the stock so dramatically.
The stock surge really kicked into high gear after two major deals were announced back in July, deals that fundamentally changed how the market valued the company. First, they signed a major, very high-profile deal with the Department of Defense, the DoD.
The military connection.
Right, recognizing MP's role in securing essential national security supply chains. That immediately signals MP Materials isn't just another commodity company. They're a strategic partner of the U.S. government.
Huge signal. What was the second deal?
Second, they forged a new $500 million developmental partnership with Apple.
Apple, wow.
Yeah, a massive stamp of approval from arguably the biggest consumer tech giant on the planet.
Okay, these aren't just supply contracts then. They feel like massive endorsements. Signals that the biggest players in government and tech see MP Materials as essential infrastructure for years, maybe decades to come.
Unequivocally. That's exactly how the market read it. And this leads us to this critical paradox, something we really need to break down for you, the listener. MP Materials currently has a substantial negative gross margin. It's listed at negative 23.66%.
Negative 23%. So they're losing money on what they sell right now.
On a standard accounting basis, yes, they are currently unprofitable, yet their market cap is sitting around $14 billion.
$14 billion valuation while unprofitable. Okay, explain that disconnect.
This needs that deep analytical distinction. The margin is negative largely because they're investing incredibly heavily in capital expenditures, CapEx. They're building out their refining capabilities, downstream processing, not just digging ore out of the ground. They want to control more of the value chain.
Investing for the future, building out capacity.
Exactly. And the market is completely looking past that current unprofitability. Why? Because the scope, the size, the strategic stature of those deals with the DoD and Apple. It just underscores how absolutely crucial these rare earth magnets are becoming and how few reliable Western sources there are. The valuation isn't based on today's earnings. It's based on strategic necessity and future scarcity value. It completely eclipses the immediate financial snapshot.
That's a perfect way to put it.
Hmm.
It really encapsulates how the market prices in that future scarcity and strategic need. You're not just buying a company's quarterly results, you're buying a strategic national asset.
Precisely. Hashtag tag tag conclusion and synthesis.
Okay, so if we just take a step back and look at our 5 mega winners again, Oklo, Centrus, Opendoor, Forward Industries, and MP Materials, we've really covered an extraordinary range of drivers, haven't we?
Yeah, it's quite a mix.
We saw essential resources, right? Nuclear fuel from Centrus, rare earths from MP Materials. We saw next-generation technology. Oklo's small modular reactors, Forward Industries, leveraging the Solana blockchain. And then we saw that rapid market speculation, fueled almost entirely by the buzz around a real estate recovery with Opendoor.
And if we try to connect those dots, look for the bigger picture. Most of these mega winners, they aren't just random luck. They seem to be responding powerfully to one of three forces, three immediate pressures in the market.
Okay, what are the three forces?
Well, the first force I'd say is essential immediate need. These are companies ready to fill a strategic gap, a gap that government or industry suddenly decides it absolutely cannot ignore any longer.
Right.
We saw that clearly with Oklo, responding to that urgent global need for electricity. And with MP Materials providing strategic materials vital for defense and high-tech manufacturing, the demand is basically non-negotiable.
Okay, essential need. What's the second force?
The second force is supply chain scarcity and domesticity. This is kind of the trickle-down effect, where scarcity itself creates immediate value, especially if it's linked to geopolitical risk.
Like Centrus.
Exactly like Centrus. They benefited hugely by providing that crucial domestic uranium fuel source right when relying on foreign sources became politically untenable or risky. Scarcity plus security value.
Makes sense. And the third force?
And the third force, well, that's the massive market narrative shift. This is Opendoor's story, pure and simple. Doesn't matter as much whether the fundamentals fully justify the jump right now. What matters is the creation of this compelling sentiment, this meme status. That generates a huge short-term gain based entirely on a perceived recovery or a perceived inflection point.
The story becomes the product.
Precisely. And that product sells incredibly fast in the market, driving the price up.
Okay, so distilling this whole deep dive down for you, the listener. Investing, as we always say, it isn't some guaranteed path to get rich quick tomorrow.
Yeah.
That core idea of long-term consistency, patience, it absolutely holds true.
Still the bedrock. Still the bedrock. But understanding the mechanics behind these explosive, short-term mega winner moves, it means watching closely for those companies that seem perfectly positioned to meet a sudden, overwhelming surge in demand. And that surge could be demonstrably real, like the geopolitical need for nuclear power or rare earths.
Yep.
Or it could be purely perceived, like the speculation driving that real estate buzz. The key seems to be identifying that leverage point before the surge fully hits, the preparation.
Exactly. And this brings up a really important and I think critical question that every informed investor has to wrestle with. How do you actually do the hard work, the diligence, to separate the temporary spike from the truly transformational shift?
Yeah, the million-dollar question, right? Pretty much. Given the extreme volatility we saw even in a name like Oklo, which offers a proven, needed, technologically advanced solution, and then contrasting that with the sheer power of narrative in Opendoor, which runs on those razor-thin margins, how do you distinguish between a temporary mega-winner spike that's maybe destined to crash back down and the actual foundation for sustained long-term growth driven by real structural changes in the market? That distinction, that's where the real hard work of a deep dive truly begins. It's not easy.
It's definitely not easy. We've covered 5 incredible stories today, though. Stories of rapid capital growth powered by tech, by strategy, and by pure narrative. So, as a final provocative thought, something for you to maybe mull over or explore on your own. Our source material really highlighted the critical strategic role of rare earths and that major deal MP Materials signed with the Department of Defense. Beyond MP Materials itself, what other companies might be out there? Maybe companies involved in processing those rare earths, or the logistics of moving them, or even companies developing synthetic alternatives. Who else is fundamentally positioned to benefit from the growing, non-negotiable strategic importance of materials and technologies tied to these high-stakes national security agreements? That kind of strategic analysis. That's the real deep dive to continue. Thanks for joining us.